How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is your daily update on crude oil. As expected, today we were able to get that previous daily high buy stop raid on the buy side liquidity above that high here. So we saw price run down and then run up. So at one point it was below discount and then it ran up into a premium. And you can see it's doing all of this being below the monthly opening price. We also saw that price was printing a down close candle after confirming the higher swing low. So odds are after a down close candle and a bullish trend, it's ideal to buy. And that's something I try to point out to a lot of traders. And I feel like it may not click for some people at first, but after a while, when they start to understand trend, they start to see, oh, this is an indication that we could potentially get a very dynamic bullish day tomorrow. And that's exactly how we were able to capitalize on it. There's no magic behind it at all. It's very simple technical analysis. I'm not going based off of fundamentals and data or reports that came out today. It's just following the price action here. So we posted last night before the move occurred away crude oil speculation. How would you have gone long? This is a very lazy or swing trader approach or position approach. You can place a buy limit order here at the close. So you're getting knocked in on weakness. So price opens on the next daily candle here Thursday. You're in long. And then you also buy on strength with a buy stop order at the open of that down candle here. That's why I had the arrow here indicating, hey, this is your indication that maybe tomorrow you should be looking to go long. And that's the ideology. Buying in a bullish trend, you need to buy after down days. And then when it comes down to a day trader or intraday trader, you should be buying below midnight opening price, buy below London open, misspelling, buy below New York open. And swing high broken right here, bullish trend formula, and then higher swing low forms. In this higher swing low, what's the ideology or the thought process there? The thought process is that the commercial speculators or whatever entity in the marketplace that controls the price action, they most likely increase their net longs again to go long here. So there was a retracement, but in this retracement, they're actually increasing their net long position. So we want to see price trade higher and get to this swing high and even this swing high up here as well. We want to see price continue to target previous daily highs. On that journey, we will have other days that are down, but that will just tell us, hey, down day, buy after that. It might be a little confusing for those that didn't understand why today was a bullish day, because I did hear others speculate that they thought that oil was going to sell. And I'm definitely happy that they were sharing that and voicing that with me, and not to say I'm always going to get it right, because you're going to see as the year progresses, there are going to be some things I call and I get it wrong too. And there are going to be things that you guys comment and tell me, and you guys are going to get it right. And I'm all for it. However, when it comes to this speculation and the actual price action formulation, I wasn't looking at the fundamentals of the data or the news releases. I was simply just looking at what price action is telling me right here and right now. And the fact that we got that break of the swing high, that's bullish momentum. And then we wait for a higher swing low. After getting that higher swing low, I instantly switch over from being a buyer or from being neutral to being a buyer. I'm more confirmed in the direction or the trend of the market. It feels a little confusing when you would see a down day and the next day is up, because most retail traders would see this and say, oh, it's down. So that means the next day should be down as well. You can see this trend market here. It's a down day. The next day is down, down, down. Well, those are certain times that the market needs to reaccumulate or purge sell side to then build itself up to go back into buy side liquidity. So prices is coming down and retracing, reaccumulating orders to go back long. That's the same thing's happening here. It just reaccumulating itself to potentially push higher. We would like to see price get back to the IPTA look back 20-day high here. It's not a swing high, but it is the IPTA 20-day high period. So if we were to zoom out, and we got a lot of annotations on the chart, so it's gonna look a little funky, but bear with me. That's that 20-day high here. But even with that 20-day high, we still have swing highs, which is right here, the one with the eyeball above it. And we want to see price target buy side liquidity. Now, there's going to be times where price does break previous daily lows in a bullish trend, which is going to just simply be a sell stop raid. So when you start to study these things over time, you'll see that in a specific trend, they all normally have the same characteristics. It is something that I want people to observe throughout the rest of the year. how bullish trends form and how bearish trends form. It's a very basic principle. Bullish trend is going to be higher swing high, higher swing lows. And that's what we have here going on. So if this were to continue, we would want to see price take out the swing high and create another higher swing high and then make a higher swing low. And the pattern repeats itself until it gets to its desired liquidity pool. So hopefully this was insightful. Peace.